is a possible division within Trump's security advisors. Because on the one hand, there's one division saying, we've got Russia on the run. Its economy is weakening rapidly. It can't afford to continue the war. Therefore, we should press Russia even more by imposing more sanctions, etc. But I think the wars in Europe and in the Middle East are secondary to the big war, which is the other division within Trump's camp, which says that we have to somehow stop the growth of BRICS, because should they mature and develop an alternative currency to the US dollar, then America's hegemony, if not at risk, is gone. I suspect that Trump's primary policy is, how do we break BRICS up? We offer attractive arrangements with China. In response, China has to reduce its relationships with Russia, or maybe at the same time or simultaneously, we offer the Iranian government deals that are attractive to Iran. Because within Iran, there is definitely a growing split between the president, who wants closer ties with the West, and the supreme leader, who wants not control over the Middle East, but wants the Western influence to leave the region, in the belief that the region has matured enough that they can sort out their own problems. I think it's that attitude is shared by many of the rulers in the region. It's time for the West to leave. So again, I come back, so many moving parts. If I had to draw a conclusion, I think that we have conflicts that escalate into short-term wars that periodically disrupt financial markets but don't lead to anything more than corrections. The time will come, probably around 2028, when the Western world and the BRICS group of nations actually then bash their heads together and we get, if not World War III, but something very close to it. And that really gives the profile for financial markets: extreme volatility. So probably in the first 6 to 9 months, we see big corrections in equity markets. And one can argue that get the bad news out of the way is early on in your term of office is good news for the president. And then you get tax breaks and deregulation and falling interest rates, blah, 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 coming into the system. And you're going to get 2 to 3 years of an inflation blow-off. The really big issue is Trump is not a warmonger, but how is he going to be able to become a peacemonger? And will he be allowed to? And what are the consequences? Because how it plays out will have a significant impact on financial markets. At the moment, he is going to find a solution to Ukraine. He's going to find a solution to Israel. So you can forget the geopolitical situation as being a danger to financial markets. The big issue for Putin over Ukraine is future security. And that means he needs control over not just the eastern side of Ukraine, but the whole of Ukraine. Because within a few years, America will have hypersonic technology or the equivalent. And just to draw a line along the Dnieper River won't give Russian radar systems enough warning for incoming missiles. And Putin doesn't want a ceasefire, because historically all a ceasefire has done is allowed the West to rebuild their resources and to rearm, etc. And then you get the next war. Ukraine is going to be an ongoing saga. And as far as the Middle East is concerned, it's very unlikely that we will get to the ceasefire agreement of Part 2 and Part 3. It's pretty clear that when you read what's really been happening in Gaza. Hamas has not been defeated. Israel is causing even more disruption on the West Bank. Israel does not want to withdraw from what they've taken land in the Lebanon. It's very interesting. I was reading a report that America is building embassy in the Lebanon. Then what's going to happen between Israel and Iran? Yet on the other hand, you see Saudi and Iran mending fences, having joint naval exercises. So you have to question whether, in order to have a peaceful settlement in the Middle East, whether you have to have war first. I think people are not recognizing impending weather patterns with the Atlantic Ocean water temperatures falling significantly starting probably the end of this year, early next year, which changes weather patterns. And then again, either starting this year or next year, we get the Gleisberg cycle, which last erupted and caused the Dust Bowl in the US Midwest, which caused a collapse in food production. So I think that other than what central banks do to stimulate business activity, the food cycle is going to cause significant inflation, which peaks in 2028. And then you get inflation repeating what it did in 1980, US CPI at 13%, global inflation around 15%. What does that do to long bond yields? They don't stay at 5-6%. They go north of 10%. And what does north of 10% give you? But a highly leveraged system, it gives you a collapse, recession, if not rolling recessions for the next 5 odd years, if not depression. So that's, in a nutshell, is how I see events unfolding until about mid-2030s. Trump basically dislikes NATO, but he's saddled with NATO. And are the European members of NATO going to cough up what Trump wants them to cough up, which is for the bigger countries 5% of GDP, for all others between 2 and 3%, at a time when their budgets are strained? So do they give up subsidies for the green economy? We can but hope. A very, very complex issue. And the other complexity is that should NATO be seen as, if Ukraine is defeated, it means it's a NATO defeat. And what does that imply for the future of NATO? That's what Trump would like to see. But all of this talk of NATO expanding to the east, I think it's just outright stupidity. So again, it comes back. We've got such change of government is creating almost more questions than answers. Always, when you get change, you get conflict. So very difficult environment. If you play the volatility, I mean, we've got a decent correction starting any day now in equity markets. For instance, the S&P down to about 5,000. But then we can see by 2028, again in a very volatile manner, S&P around 8.5, or even higher. This is not a time to make long-term investments. It is a time to trade. I mean, for all the talk about copper used in data centers and in green economy, which is going to fall by the wayside, I think, it's the big driver behind copper consumption is global growth. So for copper, I think we're going to have, starting later this year, a nice increase in copper consumption and a 4% increase next year, maybe 3% in 2027, and that will give you a nice tight market. So we have a decent correction in copper prices until the third quarter, and that's the start of 2 to 3 year bull market. Gold is being seen as the preserver of value. Most currencies are fiat currencies and will remain so. So your gold buying is less retail buying and more institutional and central bank buying. So I think every dip in the gold price you buy. Eventually, I think gold will be the base behind the BRICS currency, because both China and Russia hold significantly larger tonnages of gold than the market perceives them to hold. And in fact, I understand that Russia runs a big trade surplus with China. It's balanced by the equivalent tonnage of gold that China deposits in its central bank to cover Russia's trade surplus. So maybe that's the way that the BRICS eventually will move, in the process bringing gold back into the monetary system.